What is up, YouTube? There is finally, mercifully, good news about inflation. We're seeing the numbers start to come down. They're still pretty high, but they are starting to come down. What does this mean for the future? Will the Fed continue to raise rates? Stay tuned to find out. So the October CPI data just came out, and boy, was that encouraging news. I wouldn't say good. 7.7% growth in inflation year over year is not great, but it is down from where it was this summer, and it is down compared to Wall Street estimates. So, what does this mean going forward? Well, I don't think Jerome Powell is going to get out there and say, "Oh, we're going to cut, the interest rate by 1 basis point." But I think he might see fit to let up on the gas a little bit. Say, we're only going to raise rates by 0.25 basis points. We're going to slow down this interest rate hiking we've been doing, and let American investors and American consumers put some more of their money to work for them rather than for these companies. Because that's what raising investment rates, that's what raising interest rates rather, that's what it does, right? If these big purchases are funded predominantly, right? If you're buying a home, it's predominantly funded through bank lending. If you're buying a nice car, it's predominantly funded through bank lending. This and that and the other thing. Any big purchase, especially big purchases that are going to appreciate in value, are mostly funded through bank lending. And if lending rates are at 6%, at 8%, you're not borrowing money. You're not doing it at that rate. So you have to work with what you have, and as a result, you buy more consumer goods. Consumer goods see an increase as a portion of family budgets each year, and with that, the prices of those consumer goods come down because these companies have the same supply of consumer goods, but there's more demand for it in the market, so they're able to lower their rates, which is good. That's sort of where you want to be. It feels terrible to live through, with gas being $4.05 a gallon up here, but I mean, it is what it is, right? And seeing these inflation numbers come down, seeing these inflation numbers start to come down it's so good. It's so good. After the beating we've taken this week with Palantir earnings on Monday and FTX yesterday, and Elon Musk selling $4 billion worth of Tesla, and just all this stuff, there's finally some encouraging news out there on the horizon. And I hope, I wouldn't say I think yet, but I think that there is reason to hope that we've seen the bottom of the bear market. That we've really seen everything start to bottom out, everything just hit rock bottom, and it's going to be upwards from here. I think that there is good reason to believe that, but we'll have to see going forward. And I wouldn't recommend trying to time the market like that. The best time to get involved in the markets is yesterday. The second best time is today. And that's true no matter if you get in the top of the market or the bottom of the market. Just get involved. Just throw money at it, and do research, and do DD on some companies, and figure out what you like, what you don't like, what you feel knowledgeable about, what you don't feel knowledgeable about. But always remember, the stock market is its own animal. Wall Street is its own animal, but it's all driven, at least in part, by the Fed's decisions. So always be paying attention to the numbers that are coming out of the Fed, the announcements that are coming out of the Fed, because these announcements, these numbers are going to affect sentiment so much. And a lot of what Wall Street is in the short term, at least, is sentiment. So if you pay attention to the news coming out of the Federal Reserve, if you pay attention to what Jerome Powell is saying day to day, week to week, you're in a good spot to understand where the markets are. And that's what you want to do. You don't necessarily want to react to all this information, all this news, but you want to understand where it's coming from. So when there is an aberration, when there is stocks are going up and up and up and nothing is happening, or when stocks are plummeting and nothing is happening, you can say, wait a minute, there's nothing, right? There's nothing underpinning this motion, this movement that's happening. It's just random. It's just a fluctuation one way or the other, and that's where you can make a lot of money. In addition to just buying and holding, right, which is predominantly what you should be doing. And again, this is not financial advice, one man's opinion, but you should be buying and holding things, not getting involved with speculative trading one way or the other. But you should always be aware of what's driving the markets, what's driving these traders and these Wall Street bankers to make the decisions that they're making. It's always a good idea. Anyway, looking forward to tomorrow and next week. I think we're in a good spot to grow even more. We got NVIDIA earnings on Monday. I got an article coming out on Seeking Alpha all about it. But until then, until tomorrow, when I recap the markets, when I bawl with sadness at what happened to Palantir, when I jump for joy over the CPI data and my NVIDIA specs paying off on Monday. Until then, remember to like and subscribe, and I have been Shabby Shambles. Take care.